Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 8th. We are just getting the release of some minor data points here from Canada and the United States. Jobless claims coming in slightly lower than expected. Capacity utilization in Canada slightly higher than expected. Both not expected to be market movers here. Obviously, we are waiting on Mario Draghi, who is on tap to begin his comments momentarily. We'll give you highlights of that as they hit the wires. Great to be with you here in the room, everyone. Mark, Medad, Pete, Rich, Scott, Sushil, Thomas, Wesley. Great to be with you guys. So we do want to cover today, we'll obviously go over the dollar index, which is coming still at support. Euro dollar will obviously be in focus as Mario goes through those comments. The outlook hasn't changed. We'll go into those levels in just a moment. We are seeing Euro break higher, but we're still on the lookout for some sort of washout to the downside. Aussie Dollar is on tap. I got stopped out of the rest of that short last night. We'll talk about those levels. Dollar CAD, looking for a turn higher here. We talked about that. Dollar Yen. We'll touch on Pound and Kiwi. Obviously, gold and crude for Conwall. Jot those down. And any other pairs you guys want to take a look at? Eileen wants to look at Euro Yen. Sure. Feel free just to drop them in the message board, and we will jump right in. Okay, so obviously ECB held the main refi rate. Nothing's changed either to the deposit facility or the marginal lending facility. There's been no change to either the deadline for QE operations as well, which is sort of the main focus as we talked about yesterday, duration and amount. Doesn't seem to be any change yet. I'll continue to monitor Draghi's comments as they cross the wires here, guys, but broadly, the lack of additional easing is likely to be constructive for the euro, or bullish, to put it simply. So just keep that in mind. Again, I'll continue to bring you some of the highlights as they come here. It says QE will run through March 27th or beyond if needed. So it looks like he's starting to open the door here for a little bit more of a longer horizon. Draghi sees rates at present lower level well past QE horizon. Sees rates at present or lower level. Okay, so basically he's saying that even when QE operations start to subside or when they roll back on those, interest rates are likely to remain at really subdued levels for a longer period of time. Evidence so far suggests resilience. And again, he's going to pad this as much as possible. So I'll come back to these comments, guys, as they hit the wires. Let's jump right into price action. First things first, we might as well just jump right into the euro since we have his comments on tap right now. Here's what we were looking at last night for the euro dollar heading into today. And this is still the same basic levels I'm looking at. So let me bring up that 30-minute chart. Okay. So this was the main range in focus. This is a key region. We talked about it yesterday. Huge Fibonacci confluence, 100 off the low, 618 off the high, clear pivot in price. We were maxed out by that on yesterday's advance, even and overnight. Here's the break right up to the next topside target, which was right here at 113.14 slash 131.18. Now 131.18, guys, just to let you know what that is the reversal day close from last month. Okay, so post or subsequent to the high day, which was on the 18th, on the 19th, the reversal day close was right there at 31.88. That's exactly what we're kind of probing into right now. If we break here, subsequent targets are 31.47 and right into 114, 113.96 would be a nice clean 1618 off the lows. Now, from a trading standpoint, I can't advocate anyone trying to get long from here. So the trade is here as he goes through these comments. By the way, Draghi saying the ECB is ready to act using all instruments within the mandate, says the ECB tasked committees to evaluate options, ECB to preserve very substantial amount of support and to monitor the economy and markets very closely, says inflation to rise gradually, sees moderate, steady pace of GDP growth. The headline here, guys, that markets are running with, here's what the headline Bloomberg is sort of highlighting, is that the committee is tasked to evaluate stimulus options. So they're looking for other options. Remember, Japan is one of the only central banks out there that's actually actively buying in the private sector ETFs. They're still limited, right? And the main focus that we've been looking for also, if they're going to change anything to the capital Q. The capital Q is basically their guidelines of what assets they are allowed to buy. Okay, so make sure you keep that in mind there, but that's sort of what the markets are running with right now, that the ECB is looking for further options on what they can do to offer some further stimulus to the economy. Domestic demand supported by policy pass-through. Third quarter growth pace similar to second quarter, which wasn't all that good. Investment supported by favorable financing conditions. Okay, I'll continue to bring those highlights, but the game plan, as I was saying, from a trading standpoint, is you want to see some sort of washout here if we're going to be able to get on this long at all. Now, let me take a step back. If we continue to see Draghi's comments offer a washout, what are the levels I'd be interested in possibly trying to take along? First is right here, 112.29, 112.30. I'll also bring your attention to 112.39, which is the high volume bar. But this is initial region of which I'd start to look for some support on a possible reentry for the long side against that low from yesterday. On the flip side of this thing, if we rally into the 31.47 618 retracement, and specifically if we kind of start to meander there into the European close, that might be a fade opportunity near term, just into former trendline resistance. So those are two scenarios I'm possibly looking at for the euro. As a disclaimer, I'm not holding anything on the euro here yet. I want to see how the ECB is going to turn out today, but game plan remains unchanged. I'm broadly still looking for the euro to remain constructive. If we get a chance for a pullback on his comments here, look for 112.30. 111.96 is the last ditch effort. I would start to look for entries on the long side. Any questions on euro dollar? And again, I see some new names in the room here. Guys, don't forget, there is a camera button on the top right-hand corner of your GoToWebinar screen. If you want to take a screenshot or a freeze frame of any of the charts you see presented here, feel free to click on that for future reference. So it's going to be pretty volatile. Here's what it looks like just on the near term for the euro dollar in the 5-minute. Okay, we're basically about to cover or mid-range for the European session right now in green here. So I'd like to see this thing travel as close as we can get to those lows. Turns out that those lows are right at the 1230, 1228 level, the high volume level at 1239, an area of interest for me for euro. All right. Okay. I will come back to euro yen, Eileen. I just want to get through the dollar yen as well as far as that's concerned because it kind of matches up pretty well. But I do want to jump really quick into Aussie dollar. So this was a trade I was actually involved in yesterday. I know that swing trades from Jamie's end of things were also involved in this trade. Look, there was a beautiful entry yesterday during the U.S. session against the highs here. We talked about it here in the webinar. I was looking for a stretch into 76.98. You didn't quite get it, but you did get a really nice short trigger on waning momentum and divergence on the 5-minute. So I jumped into a short full leverage on that just for a pullback. I took off half at 20 pips, a quarter of the ATR is like 17. And I left the stop at break even looking for a run down to 76.50. You didn't get it, okay? And actually last night we kind of plowed right through that 786 retracement, initial targets at 77.25. And now I'm looking for a stretch towards 77.56. Here's what it looks like on the daily chart. And again, Aussie, the cleanest daily chart out of all the U.S. majors still. Okay, this is a basic trendline, resistance dating back to the April 2013 high. So I'm not really stressing this. But what I am stressing, because you didn't get a touch here last month, but what I am stressing is the high day close for the year, which comes in right at 77.35, and then a basic 88.6 retracement, which is not in and of itself significant. But the fact that you saw it catch the highs literally to the pip last month offers further validation. 77.56 into that 77.35 level. So a key region of resistance, which is why I'm not really interested in doing anything on the long side of the Aussie just yet. Also note that on the pullback here that we made late last month, momentum came right off that 40 level, keeps the broader trade constructive, but you're coming into near-term resistance. The reason I highlight this is because we might get an opportunity for another near-term fade after this stretch to the upside in the Aussie. That being said, I would really not be looking to do that until we get into this region here. Okay, and I'll be possibly looking for some near-term short triggers off that mark. This is a 4-hour chart. Here's what it looks like on the hourly basis. Okay, and again, there's that trend line. We broke through it. Looks like we're testing a support again. My trade idea or my sort of plane of thinking here is if we do get that stretch into the 88.6, again, look for some exhaustion, a possible near-term pullback. That would be a counter trend trade. So again, half leverage. And then inevitably we would be looking to get a little bit more constructive. But Aussie dollar continuing to stretch higher. Excuse me. Can we look at Euro Oz later? Sure, let me jot that down as well. We'll take a look right after Euro yen. Sorry guys, got to tickle my throat. Okay, so we're going to come back to this, or we'll continue to track the Aussie dollar. Again, here's where I got, just to show you for transparency here. Here was the entry yesterday. Okay, price action started to make higher highs. Oscillator made lower highs. The trigger break didn't come till later, actually on the 5-minute or on the 1-minute. If my computer doesn't freeze. You can see with a little bit more clarity here. On the entry break. So we talked about waiting for the turns last week, and Eileen actually brought that up yesterday as we were talking about, oh man, this thing's going to keep zooming out every time. As we were talking about Kiwi running into resistance, right? This is a perfect example, and I kind of just wanted to walk you through kind of the thought process behind it. So we came into that resistance, or we came and turned just ahead of resistance, and momentum started waning on the 5-minute. So you're automatically starting to look for a little bit of an exhaustion pullback. What made me get involved here is the fact that not only did we get that divergence, but on the subsequent rally, this thing turned right ahead of 60. And that was the first time since being in overbought condition that we saw 60 resistance. On that 60 resistance hold and reversal, you had a 3-4 point trigger touch here, which broke. Okay, so it made a high, continued to try to make a high again. You got momentum holding 60. This is sort of waiting for the turn mentality for me. You jump to the trade. You got to stop just above that swing high. And it held out pretty well. Okay, obviously it doesn't show the exits here, guys, after the 24-hour span. So again, you're looking for about 18 pips per scalp. We booked about 21 down on the move here into the U.S. close. Stops at break even. That kind of triggered us back on the rally. So remember, even when we're scalping, capital preservation is paramount. Anytime we're taking something off the table, that was a positive trade. We're in the right direction. I'm not going to take a loss on it, even if I'm still bearish. If it takes me out of break even, great. All that means is I'll probably get a better opportunity to get short at a higher level. So trying to get stubborn with these trades, especially on a scalping basis from, and especially when you're counter trend trading like here, is always going to be a risky effort. So make sure we're always making sure that our risk management is paramount in all our trades. Eileen said, missed that Aussie yesterday. Saw it later in the day cleaning up the charts. But cool, thanks for the extra explanation on the turns. You're more than welcome, Eileen. I thought that would help you out there. Okay, so moving forward, coulda, woulda, shoulda. Moving forward from here, look for 77.56 to offer some resistance. This is a big region. If it does plow through and you're not long, don't chase. You have a couple of median lines just higher, of which could still offer a near-term key reversal in price here as we breach through last month's high day close. All right, so tracking for some near-term resistance in Aussie. I still like the broader upside of the trade. I'll remain constructive, broadly speaking, while above 76, which is this region right here. And actually on this chart, we also do want to just extend the new retracement to the new highs we made. And if you do that right, 76, excuse me, turns out being right here. Same level as right here. All right. Any questions on Aussie dollar? I do want to take a quick segue. So Aussie was second. I'm just keeping the order of what we talked about. I do want to take a quick segue back to the dollar index because as the Aussie continues to rally and as the euro continues to rally, here's what the index is doing. It's coming into that major critical support barrier that we talked about yesterday. There is no change to this chart, guys. This is the same chart that we talked about. Yesterday, you noted that we rebounded off of this basic trendline support. On a closed basis, we closed above it. Here's the breakdown, but as we noted, this is still the key critical region of support, 11,853, 11,850, the 1618 extension from, or the 618, excuse me, the extension off the high, the 618 retracement off the low, last month's close lows. It's a lot down here. Former trendline resistance, now support. So we're not out of the woods yet. Momentum holding 40. But my point being is if this thing does break to the downside, specifically on a closed basis today, there's really nothing until down here, the low day close for the year, which coincides very nicely with a 764 retracement at 11,783/86. So I don't want to take a carte blanche bearish tone on the dollar index just yet, but you're coming into a major support level here, and if 11,850 breaks, look lower in the dollar index. Remember, at its inception, this index was equally weighted Aussie, Euro, Yen, Sterling. So it does not include the Kiwi. It does not include dollar CAD, but certainly the four most widely traded currencies, most fluid currencies versus the dollar. Even on a near-term basis, guys, here's what the scalp chart looks like. I don't really like trading this on a scalping basis. I mean, I can't trade it here stateside, but even if you are trading this, keep in mind, again, the index spreads. Either way, 1180, 11,850, 53, we just tagged it right now. Here's your weekly open. And if you constitute this as a weekly opening range break, what we made yesterday, then yes, we should be looking for a late week low. It's Thursday. You might dribble down a little bit lower. Keep in mind that former channel resistance. But just know that we're coming in some near-term support on building divergence. Price action making a lower low, the oscillator making a higher low. Okay, so it's a little bit vulnerable here for continued short side action on the index. Any questions on Aussie dollar? Or excuse me, on the dollar index. Geez, that was number 3. Okay, so going back to yesterday's setups, we went over Aussie, we went over Euro. I want to touch real quick on dollar yen. The abomination is still of interest for me. As a disclaimer, again, I haven't touched anything on dollar yen yet, but I am looking for long triggers off of 2 key levels near term. 101.36, which we tagged yesterday. It's a basic key 618 retracement from the advance off the lows. And then right down here into 166. And this is, the significance is not only, necessarily because it's 764, but just the bottom range of this formation, which has been quite fruitful. I know that we probed above it here late last week, but you can see the median line action has been very nice. Even the 50 line here, excuse me, this is actually the 618, okay, line of that range has been very fruitful, and obviously the upper and lower parallel. So this is the lower parallel, comes on the 764 retracement, looks pretty good. We did hit the top parallel and probed above it, so I wouldn't be surprised if we turn ahead of this, make a lowered floor type of turn. But I'm still looking for a little bit more of a conviction turn in momentum, and I don't think we've gotten that just yet. This thing hasn't, barely probed above 50 yet. So for the dollar index, or for the dollar yen, I'm still in the same mindset as I was last week. I'd be looking for a washout to get long. And that washout, if it comes into 166 or even near term here today, if it gets into this region late into U.S. trade, I would be possibly looking for some long triggers against that low. Initial targets 101.90. Key resistance at this point, and this is out in time now, but it's still 102.60. This is the level I'd want to clear to get back on the constructive side of the trade. You can see clear pivot in price there. The median line of the current operative structure coincides just ahead of that, and it would necessitate a break into the upper quadrant here, which would put us back on the constructive side. So no plays from my side just yet, but I am on the lookout for a pullback to get long in dollar yen. Note that this level down here also coincides with this region here, which is the July low day close, and also the broader median lines for this formation that we've been following in dollar yen for a couple of years now. A sliding parallel off that high from August comes right in that region as well. So for once, the abomination is actually kind of giving us some good levels here finally. Conwall says, if I go long, where would I place the stop? Conwall, here on dollar yen. So it depends where you take the long position from. If we get into the U.S. trade session and this thing pulls into here and gives us a long trigger in momentum, especially if RSI is holding 40 here, the stop would still need to be against that low. So I don't really know if you can fit that within the confines of our quarterly ATR target. It might be a little too big. But if we do get the drop into 166 or that kind of region, you'd need to wait for the turn. Just as we said earlier, you'd need to wait for the turn and take the stop against the low that you spike into. Because the actual concerted low, again, I'm talking to you, Conwell, from a scalping perspective. From a swing perspective, your stop would have to be against the low. Would have to be against this region with an entry here. If you're looking to play the broader swing. From a scalping perspective, trying to play these levels, I would need this thing to spike lower, come off, retest support, and I try to take a low against whatever low was just made in price during that session. That's why trading turns, guys, is always the hardest thing to do, right? It's always going to be better off kind of just playing the pullback within a session necessarily than trying to play the spike low. Although I'll show you an example in our next trade. I'm going to move over here to dollar CAD. If there are no other questions on dollar yen, here's what dollar CAD did. This was a trade also I highlighted last night. Both me and Jamie were actually involved in this one on this spike here on the BOC post right after our webinar here, right? We talked about the July low day close. That was 28.32. We talked about the lower parallel here on the daily chart, how this thing was just coming right off it. And while the BOC did, offer a little bit of volatility, broadly speaking, they were a little bit more dovish than expected. Remember, we talked about in the webinar, I was telling you, everyone's expecting something dovish. So in fact, if they come out a little bit more hawkish, this might be a lot of volatility. The exact opposite happened. They actually did come out pretty dovish. So what happened? You saw dollar CAD come right into that July low one more time. Excuse me, not the low day close, the low, which was a confluence support right here, okay, with the lower parallel. So look, again, trading the turns is never easy. From my standpoint, I'm looking at a couple of different things. You're marking divergence all into these lows, lower low, lower low, lower low. Remember, we're only looking at the closes as the oscillator made some divergence as well. So this was actually a great entry into U.S. trade. Jamie kind of bailed on it. I bailed on it as well just as soon as it kind of rocketed 30 pips here. But at the end of the day, I still do like the trade. I still do like the trade on this turn. Look, if dollar CAD is going to turn, this would be a good area. And that's how you want to play this. We're not trying to catch a falling sword. We're not trying to play a hero here. But if we're going to see a turn from a technical standpoint, this would be sort of a sweet spot to try to do that. So I'm on the lookout for long triggers and momentum. I'm willing to take as many long scalps against this region here. Again, so if we get a pullback again to U.S. trade back towards 28.30, that would be a beautiful entry. Or even a probe back into this trend line. I know it's not seen here on the daily chart, but just to show you this basic pivot trend line. which was part of a structure that we were working with. Support, support, resistance, resistance, support, support, support. All right. What would make me want to get short? Pretty much nothing right now. Either a break sub 2763, that would basically open up the 2016 low day close and the June low day close. But I'm not really looking to play this pullback on the back of this drop-off that we saw. It's been a pretty substantial drop-off since the open. The monthly open, guys, comes in at 131. So we're only on the 8th day of the month. I'm looking for a little bit of an exhaustion rebound here or a recovery for dollar CAD. And as we said earlier, remember, dollar CAD is not in the index, but with the dollar index coming off support, might not be the worst idea. Okay? Any questions on dollar CAD? I do want to also quickly remind you that later today we do get oil inventories on tap at 10 o'clock. So we'll be looking for those oil inventories, at 11 o'clock. Oftentimes can be big market movers for the crude market as well as CAD. So keep your eyes on that later today at 11. Ruth says, have you done the euro crosses yet? Ruth, I haven't gone into any cross except euro dollar. We're going to go into euro yen and euro Oz in just a moment. Some more comments hitting the wires here from Draghi says, no need for extra stimulus for the time being. So really sets the tone. Didn't discuss extension of asset purchase plan. ECB cuts growth forecast for 2018. GDP forecast from 1.6 to 1.7. That's a bump lower. Leaves 2018 inflation forecast unchanged at 1.6%. Okay. So, a little bit more of a wait-and-see approach here from the ECB, saying that they didn't discuss added stimulus yet. They are looking at different options for them as far as additional easing measures, a slight decrease to the forecast for growth heading into 2018. A lot more of a wait-and-see cautionary approach here from Mario Draghi today so far. Oops. All right. Dollar CAD looking for further upside here above 28.31. Hi, Mike. Do you think it's okay to buy Aussie dollar at 77? And take a look back at it, Aussie dollar. Look, this is why I wouldn't want to tell you to do that. To be quite honest with you, Wes, me personally, it actually might be a little bit deeper than 77. Basically off this trend line. Might be a decent scalp against the session lows for Asia last night, just for a recovery to the top side. But here's my mindset, Wes, for the Aussie. If we open the U.S. session and this thing reverses and continues to hold below this trend line, this could be a classic false break scenario. Let me bring your attention to this. Look at the last time we tested that 88.6 retracement up there. You see those long wicks, long wicks, long wicks, long wicks. I don't want you to wait for this long wick to extend, come back here, and then start buying on the pullback. So this could be a false break scenario, which is why, like I said, I'm not really interested in taking long exposure per se from here. I'd either need a more substantiated pullback towards 76 or even a 76.50 or a topside break above 77 and 55 and a pullback into that region again to get long. You know what I mean? If you stay nimble, Wes, it could pan out for a long against that trendline support, sure. With a really small leverage trade, yeah, I got no problem necessarily playing that probability. But broadly speaking, from the broader picture here on the daily chart, this could be a false break scenario, and the pullback could be a little bit more severe than you'd want to sit in on the long side. Wes, does that make sense? He says, okay, I was short at 77.25, but just closed it. We'll wait. Thanks. Yeah, I mean, if you're short, actually, that was a great entry for this short. If you're holding a short position off this, 77 would be the first area I'd actually start to look to wrap that up a little bit. Take a little bit off, bring your stops down to break even, and look to target this trend line. Then, heading into the US session, this might be an opportunity to play a little bit of a rebound. But if we break this trend line, that would suggest that this is, like I said, a false break scenario. Look for support back at 76. Hope that helps, Wes. Excuse me. Hey, you're more than welcome, sir. What does that mean to euro dollar? Eileen, give me a little quick background what you mean by that question. I think I missed that when you wrote it. I'm not sure when you were referring to that. All right, so that is dollar CAD. Oh, I mean Ruth, sorry. You said what does that mean for euro dollar? If you wanted to give me some more information on that. Oh, it's the news from the ECB. So Ruth, that would broadly be constructive for the euro, because if they're not going to do additional stimulus measures right now, tends to weigh heavily on the local currency. Remember, a lower euro is always going to be beneficial for a country that is having economic turmoil. It makes exporting goods much more appealing. And generally speaking, it's one of the major ways that central banks try to ease policy. But that being said, the fact that they're leaving the door open for more easing, the fact that they're looking at different measures to take, the fact that he says explicitly the ECB and the committee stands ready to do anything and all that's necessary, that suggests that there's definitely more coming down the pipeline. And Eileen, or Ruth, I don't want you to look at this. She's saying, so it means euro would go down. I don't want you to look at it as this means euro is going to go up or this means euro is going to go down. The longer implications of these types of policy measures are not going to be seen in the intraday, like session. Do you know what I mean? Everyone was expecting that the ECB would say, okay, we're going to roll out new measures. We're going to push out the QE deadline past 2018 and all this nonsense. That would have caused expectations that, okay, there's much more easing in the pipeline. But they didn't say that. They did nothing today. So the immediate pressure on the euro let go. And that's why we're seeing euro rally into the highs. That doesn't mean it's just going to be straight up, right? Ruth, the initial reaction we're seeing now is not because of implications for what they're going to do down the line. It's because they didn't do anything today. They didn't extend the measures. They didn't increase the measures. So people who were scared that the euro would still be watered down on further easing, you get that quick snapback higher. All right? Remember, guys, fundies are, my biggest concern is that people try to take fundies and turn that into a trading strategy. It's just not necessarily the way it works, especially on intraday trades. We're playing the reaction, Ruth, to what the market is, to what the market's reaction to what the ECB is saying, not what the longer term implications. That's not going to manifest itself in a single day. Okay. All right. So we did dollar index, euro, Aussie, dollar CAD. We did dollar yen, if I'm not mistaken. That was 4, 5. Sterling dollar, and then we'll jump into your questions. Here's what sterling dollar looked like last night. Or here's what it looks like now. We didn't highlight that last night. Here's British pound. Nothing's changed on this. Again, I don't have any open exposure, although I'm still in the same exact mindset to buy some sort of washout here in the British pound. Again, we're coming to that critical support, and as long as we stay above this region at 32.50, I'm actually looking for a pullback to try to get back on the long side. It's been sort of a lackluster week so far. Eileen, are you in the room? Oh, yeah, there she is. I'm sorry, I talked to you earlier. I saw your tweet earlier today. Look, the difference you're seeing, so Eileen tweeted, just for everyone in the room, that she's looking at the sterling chart on FXCM's market scope and the sterling chart on TradingView, and she's seeing a little bit of a difference. And that is because, if you recall, Eileen, when we had the Brexit, we changed our rate feed to the FXIDC rate feed, which is a different rate feed from what FXCM is using. The reason we did that was so that we can see price action going way back past, the 1980s. 1985 was the last low that we saw on that Brexit move. So we needed to get a feed that went back a little bit further than FXCM's feed. The problem with that, Eileen, is that the closes that the FXIDC uses is slightly different than the close of what FXCM uses, or actually what the broader markets use, to be honest with you. So there's going to be a slight difference in what you're seeing as far as the candle closes. The spike highs and lows shouldn't be too all that different, but definitely the candle formations will be a little bit off because of the closing times for those candles. Does that make sense? Oh, the IDC, yes, candle difference wasn't on other pairs, right? And that's because the only reason we switched to IDC was for the Brexit, right? When that thing went to lows we haven't seen in decades and decades, we needed to go back in price. So just a quick answer to your question there. As far as price action is concerned, like I said, the immediate risk is still for a move lower here. I am looking for some support right along the 50 line here, former trendline resistance. All coincide right around this region into 32.50 for dollar, for British pound. Any questions on sterling? Missed the short this morning. Yeah, there was actually a really 33.72. Do you see how clean that held? These levels are exact the same levels from back a few days back. I believe it was on Sunday, right? Or on Tuesday, rather, sterling dollar. Right there. There's that 33.72 level. We literally came right back and tapped it once more and broke through. Exact resistance. And here's the turn. So yeah, look for immediate support at 32.88. We're approaching that now. That's the low or the opening range low for the week, and also the 618 retracement. But bullish invalidation for the near term bias is down at 32.50. And that is British pound. Moving right along, here's your questions. I had a question on Euro Yen, Euro Oz, and Kiwi. I do want to touch base on Kiwi first, just because I do think it's coming into a big region. Look, oh man, it's turning already. What a great position for the Kiwi to turn. And if it's going to turn, same thing with like the dollar CAD. If we're going to see the turns, we never really know, but you want to be prepared and have the levels marked. This would be the region to market, 74.80 into 75.15. A beautiful long-term 1618 extension. This is from the ascent off the lows of 2015. A longer-term 50% retracement. This is from the decline off of the 2014 July high. And you had basic channel resistance, which is a median line parallel from support, extended off the high that we made in June, literally almost to the pip. So there's a lot to look at here. Now, for us to call this a full-on reversal, I would need to see a move back below 73.80. Okay, but initially, this is a key region of resistance. Momentum is at a former trigger support. Now resistance at 70. Near-term price action finally started to show a little bit of a waning momentum signature here on divergence. Remember, look at the close. Higher high, lower high, sub 70 hold. Looks like a nice little exhaustion pullback to me. Okay, we might have just missed that during the webinar, actually. So in any event, you'd need to break below down this region, basic pivot line here, just to get the confirmation for a pullback. I'd be looking for a move back towards 73, 72.95, this key region here. This is also the weekly open comes in just lower, but starting to look good, in my opinion, here for Kiwi, turning over a little bit more abruptly after that major stretch to the upside into key resistance. All right, so I'm still in the mindset here of selling rallies for Kiwi dollar below 75.15, 74.80. Any questions on Kiwi? Okay. Euro yen. Let's jump into the euro crosses as we get any further comments coming out from Draghi. Okay, committees have full mandates. Draghi says the ECB is aware of negative rates pose challenge for banks. Says the ECB is aware that negative rates do have consequences. Stands ready to act in the second round effects if second round effects are seen. Says risk aversion no longer a factor in lending. ECB doesn't see signs of cash hoarding. policy has been very effective. So they seem a little bit more confident here whilst taking an approach while saying that they still can do a whole host of additional measures if needed. Let's move right on to Euro Yen. Here's what Euro Yen looks like. Just to start off, I'm going to tell you that I haven't really traded Euro Yen, Eileen. I think this question is for you, right? In quite some time. You know, for the yen crosses, there are times where they come out to be a little bit more clear, but for me, not really a big fan of this right now. Let me do some on the fly here. Give me one moment. Nice 618 rebound. It's going to be the 50 right there as well. Momentum actually does look pretty constructive here. This is your first 60 break of the week. Took a long last night, left it an overnight, and it stopped out on a too tight stop, of course. Ooh, Eileen, really? That was a great, I was going to say, that actually would have worked out pretty well. So look, this is what I have. Near-term resistance at 115.09, basically just where we came off. That's a basic 50 of the drop, but it's also former median line support turned resistance. Expect some kickback from here. But I actually like it higher. I really don't have anything against this. Just on account of also where I'm seeing Aussie dollar, or excuse me, Euro dollar. I like Euro dollar lower initially than to buy. Same thing with dollar yen, lower than to buy. So I do think this thing could see a little bit more of a drastic drop off, and then you look to buy it. Here's what the monthly open looks like. Yeah, I mean, I like it higher, Eileen. If we take a look back to the daily chart here, which is what we've been following for the last couple of years, again, the lower median line parallel, although it is compromised on multiple occasions, has been a clear pivot. Support, break, resistance, break, support, break, resistance, resistance, break, support, and still keeps the focus kind of higher here. Now, on its face, I do want to point out that this could be a simple consolidation feature. Okay, this could be a simple consolidation, wedge, triangle, whatever you want to call it, which oftentimes can be continuation. That being said, the divergence we made into the lows and the broader turn that we're looking for in the euro, I do actually favor an inevitable topside break of this formation. The level you'd need to get through to really validate some sort of breakout would be 116.66. That's the high day close from July, but it would also necessitate a break of that formation and really clear the way, I think, for a larger advance in euro yen. So that's all to say right now, Eileen, I would be looking for a pullback against 115 to get long. All right, hope that helps. Okay, we'll keep an eye on it. Yeah, Eileen, I will too. Says, yep. Cheers. I will update you on that if I do see anything. You sparked my interest on it. Euro yen, huh? If we can get a little bit more clarity on the abomination, if dollar yen finally makes that low, this could explode. This could really rally. The other trade someone wanted to look at was Euro Aus. Hey, Scott, did I miss your question? Looks like your lower parallel was hit to the pip in Euro dollar, not to backtrack again. Well, now you're going to have to make me look back. I hear you. Which one? This one, right? Yeah, literally. That was disgusting just now. Oof. You know, the trades I missed to do this webinar. I'm just playing. All right, Euro Oz. Let's see what Euro Oz looks like on the 30-minute chart. Also, Scott saying no off the fork for the Euro. Oh, this rally here. Yes, yes, yes. Former fork resistance. Yep. I was looking even just at this within the confines of the last hour. Do you see how the pullback came right into the upper parallel here? It's just been, you know, a ping pong game here for Euro Dollar. But Euro Oz, here's what Euro Oz looks like. If you guys remember, we actually did talk about this last week, about the fact that this formation may be in play. We didn't have too much confidence on it, although the 50 line literally caught the rally for late last month to the pip. Here's the pullback. She's a beauty. She is a beauty. Here's the monthly open. Okay, here's your monthly opening, or here's your weekly open. We came right into that 618 key retracement of the advance off the lows that we made last month. We rallied right back to the 38.2, turned ahead of that. Here's the secondary approach. You're getting strong divergence on this secondary pullback. This is an hourly chart. Remember, the larger the time frame, the more significant the divergence signals become. So here's price action making a much lower low on a close basis. Okay, and the oscillator making a higher low into structural support. I like it. I was really tempted to buy at 45.80 just now, says Wesley. I mean, that would have been a dream entry. That would have been a dream entry. Yeah, guys, these levels are still the same levels from last week. So we turned right ahead of resistance. We hit the target at 147.02, the monthly open. We haven't taken a look at it yet this week, but now that we're coming off this region, absolutely, I do like the long side here for Euro Oz. And that would match well with what Aussie Dollar is doing. Possible pullback off support would give Euro upside. I would just say that from a scalping perspective, don't chase. You know, the weekly open comes in here. You might see a rally into 47.50 and a pullback. I'd be looking to play that pullback or be looking for that pullback to get back on the long side here. But typically a pair that can have a lot more of a wider ATR, guys. So just use some caution here. Here's what this looks like, by the way, if you need a snapshot for future reference. Ruth, yep, it's coming into resistance right now. Near-term resistance. Yeah, Wes, if you're not in it, I wouldn't be buying up here. No, no, no. I mean, not from a scalping perspective, or not from an intraday trade perspective. You're chasing here. You're well off the lows. You're over 100 pips off the lows. So you need either another attempted pullback and test of that trend line, or either a break above former channel support and a pullback into that region. Again, you'd be looking for inevitably a rally back into the monthly open, which takes as high as 48.36. I meant to wait for 146. Ideally. So Wes, when we're looking at these intraday trades, man, it's all about if-then statements. I come into the US session every day with my setups saying, all right, if Kiwi reaches this area, I'm looking to do something. If Euro reaches this area, I'm looking to do something there, right? We don't want to kind of just look what their market's doing and jump into the trade. So yeah, I like where your head's at exactly. 146 for me would be right a nice round estimate of where this thing would be looking for some support. I would expect to see if it comes back, honestly, to possibly turn ahead of that, maybe like 46.13, just because we've already probed and failed miserably on divergence. So I doubt that we'll actually go down that low. Long story short, this is the region you need to clear to validate, you know, the reversal higher. You need to get back above that 50 line. Actually, let me see something real quick. Yeah, so that's something I would actually consider. Sorry about that, guys. Just trying to get the right slope. This might be a region I would just start to look at, but just because it highlights the same, just higher. So let's do this. The 50 is going to be right in there. Boom. This is what I'd be looking at. All right. So the 50, the drop off the monthly high, or the late monthly high, comes at 47.34. That lines up much better with actually where the monthly open and where the weekly open came in, which is 47.38. So a little bit higher for resistance here on Euro Aus. All right, let's move into the commodity block. We can't leave Mr. Conwall out. Here's what we're looking at with oil. The trade has made a near-term breakout, as we said yesterday. Wouldn't be surprised to see this thing come, make a test of that 618 retracement, high day close, 47.31. Here's what the scalp looked like from last week. Obviously, the region of support that we came off of was pretty big. We took out all the topside targets into the median line parallel before failing towards the end of the week. But here, you know, here we are again, making a breakout higher. Look for resistance. Again, 47.36, 46.70 are areas of interest for me. Possible resistance for crude. If, who is this for? Conwall. If, I just want to say one thing real quick. If dollar index does break lower and you see a substantiated drop in the dollar, I would be looking for the crude chart to find resistance more so towards the upper parallels again. It's priced in dollars. Although that correlation is not a correlation I like to base trades off of, I just think from where you are in a market psychology standpoint, if you do see that drop off in dollar really start to plummet, look for crude to possibly see a snapback higher. All things held constant, I am looking lower sub 47.31. Let me check something out real quick. Bear with me just a moment. I just want to see if there's any fibrillations here. Okay. Conwall, these are the levels I'd be looking at near term. These are the levels I would be looking at near term. And the last thing I just want to take into consideration is if we have any type of guidance to the advance. Does it have structure? Yep, I'd be looking higher immediately from here, but I'd be looking for a near-term exhaustion at 4670, 4731. That zone should offer some sort of near-term pullback. Okay. So should take the short or wake when reach the level. Again, Conwall, remember, we don't just throw levels out there from this type of strategy. It's very momentum based. So if we reach into that region, I need to see something happen. I can't just put a short entry at 47.31 on a trade like this. If that's the way you're trying to trade, then you want to take more of a swing approach, and that's going to require you to put your stops out a little bit further and get a little bit better of an entry as far as structural resistance. So you'd be wanting to wait more towards a rally towards here. Okay, if possible, the bullish invalidation. The bullish invalidation still has to stay above this trend line. It's basically where we capped out the last 2 weeks. I would be interested, or I would be willing to take this stance, Conwall, as a bullish invalidation, this trend line, which comes in ahead. But broadly speaking, I'm looking for resistance in this region, a break above this trend line, which sort of shift the focus back to the upside. Okay. As far as gold is concerned, Joel has a lot of questions. So with gold, I have a sell on. So would like your opinion. Sure, Joel. I saw a couple of your notes here on gold. So here's the gold trade. I want to know what your opinion is, Joel, as far as what you're trying to do with that trade. Are you taking this as an intraday? Because intraday, I still think you could probably pull back as deep as 13.35, another 10 bucks or so. That's just my humble opinion. For me, the implications of this rally, I mean, you're flirting with a disaster here. If this breaks 13.55, like I said yesterday, I'm looking much higher. 13.80, 1400, 14.17 would be on tap. So, I'm not really aggressive about trying to short gold per se here. That's what I have my target. That's what I have my target. My stop is break even. Joel, I'm with you, man. That's exactly how I'd play it. Love it. That's exactly how I'd be in the trade. In fact, I might want to choke that up just a bit, just ahead of it. I'd hate to see this thing wick out into like 1336 and you get not filled on the order. But yes, this is the exact region I'd be looking for the pullback to find some support. And if this is going to be a legit breakout of the 2011 basic long-term trendline resistance, then that's where we would expect to see some support on the pullback. He says, sorry, on my phone. No worry, Joel. No worry, man. Does that make sense, though? I hope we're on the same page there. I do like the levels you're looking at, though. So that is gold, my friends. Keep in mind, again, we do get some China CPI numbers later tonight. Here's the economic docket for the remainder of the session. 11 o'clock, you can get those oil inventories. So keep that in mind with the oil trade that we just said. Look, if you see oil inventories miss, okay, meaning that the supply is shrinking, I would actually be looking for a spike high here to possibly give us a nice short opportunity heading into the 11 o'clock hour. So watch for that oil inventory print. Again, like I said, it's usually a big market mover, especially on scenarios where you do see a miss. Later tonight, like I said, CPI from China is likely to be a decent market mover. We're expecting year-on-year CPI to actually soften from 1.8 to 1.7%, and that'll pretty much wrap it up as we get deeper into the close of the week. You do get industrial production figures from France, not a major market mover. Look for those trade balance figures from the UK tomorrow morning at 4:30 as well. Okay, well, if there are no other questions, we'll go ahead and wrap it up here. Are you indicating the euro dollar should go down before advancing further? I missed this earlier. Ruth, that's my take on things. That's my game plan. Look, I don't know that it's going to pull back, but from a trading standpoint, the way I would trade it, it'd be a pullback into this region to get back long. I am targeting 1347 on a stretch higher here if we do break, but keep in mind you're at near-term structural resistance, former support, now resistance, okay? Doesn't look like Mario offered the pullback or the washout we were looking for. So I'd be cautious to see how the U.S. Open and specifically the European close looks like. If this thing holds this into the European close, look for the pullback. Dan Schultz says dollar peso. Don't really follow it real close as much as Jamie does. Dan, let me know. Do you have any specific questions on it? So we're short at 1840 with a stop at 1863, right? He does have an open target. For my part, I did love the entry on that trade, especially where we were yesterday. I don't have a scalp chart prepared for you here, but some levels I'd be looking at of interest would be basic trendline support, which has been a decent pivot here near term. That's just below the low we made yesterday. And then the 618 extension of the decline off the highs actually takes you into like 1813. The 200-day moving average, 1807. I'd stay bearish within the confines of this weekly open. So I continue to stay bearish in this well below 1851, I would want to say. Excuse me, the weekly open, which comes in at 1851, 1850.66 there. What an entry. I mean, the thing that you need to keep in mind here is that we're still in consolidation, but it's a bearish momentum bias, and it has been for a couple of months. Here's the last time momentum tried to break 60 on the upside. Sub 50, failed at 60. Sub 40, failed at 60. All indications, that a little bit more of a tired trade here to the upside and long side momentum is waning. So you might see a little bit of consolidation here over the next couple of days. I wouldn't be too surprised. Broadly speaking, I want to stay bearish below the weekly open. All right. Okay, guys, we'll wrap it up there. And like I said, I want to wish everyone a happy weekend. We will be back on board. Remember, on Monday, we do have a public webinar on daily FX. That'll be open to everyone. We're right back here on Tuesday, Wednesday, and Thursday of next week. Wish everyone a happy and safe weekend. We'll pick things up then. Best of luck trading. Cheers.